What's up, guys? It's your boy John, back again with a new video. Today I just want to talk really quick about what we're looking forward towards in the new year, 2023. It's about midnight right now, early Tuesday, right before the market opens. So we have a new year ahead of us, right? So what are we looking forward? Obviously, the number one thing is combating inflation and seeing how aggressive the Federal Reserve is going to continue. I think what a lot of us forget about with the market is it's all about expectations, right? And so now when we think about the stock market as a whole, what is forward looking right now? And I think that is what is causing a lot of volatility in the market is we don't have a clear answer, right? We know the Federal Reserve is going to keep raising interest rates and then we're going to have a pause. Now that pause doesn't mean we're changing interest rates back down. The plan is to hold interest rates and continue to look at the inflation data that comes in each month, like the CPI, the PPI data, jobs reports, etc. We're seeing what is happening with unemployment, consumer inflation, producer inflation, and how that is going to affect us forward looking. So we don't know how long that's going to last, but ultimately that is what causes the market to flourish or to diminish. So let's talk about Tesla really quick. Tesla came out with their delivery reports. Analyst consensus was around 420,000 for the fourth quarter of 2022. And it came in a little shy, right? 405,000. It's about 40% year over year growth. So it's a little bit shy of what they were expecting. But why has Tesla plummeted so much in the past 3 months without any indication or data? This is the first data that we've actually gotten from Tesla. So let's take it back to what I was talking about, the stock market being forward looking. And why is Tesla down so aggressive this past 3 months? And a lot of it comes down to investors and what they're thinking looking forward with Tesla. It's not about what's happening with the stock or the company right now. It's about what's going to happen 3 months from now, 6 months from now, 5 years, etc. So Tesla's a great example of that because we can easily pinpoint what has happened in the past 3 months that's caused the stock to plummet. One of the first things that started to worry Tesla investors was demand in China. When third quarter results came out, demand in China clearly looked like it was slowing down. Is this about new competition in China with electric vehicles? There also are a lot of talks of recession and depressionary fears in China as well. So we don't know if demand is falling because of economic issues, and we also don't know if demand is falling because of new competition, or it could be a combination of all those things. And ultimately what happens when you start hearing all of these headwinds, we create FUD, fear, uncertainty, and doubt in the stock. When investors start to lose sentiment towards a stock, the stock is going to fall. Another huge headwind in Tesla, Elon has now become the new owner and CEO of Twitter. This has caused a huge amount of FUD for the stock because a lot of investors feel like he's taking too much time away from Tesla and investing it into Twitter, which right now seems like a company headed for bankruptcy and needs a lot of help restabilizing itself. So when you take all these things into consideration, investors are going to assume the worst. And all it took was 3 months for Tesla to turn into a stock that initially seemed like a great hedge against recessionary fears and inflationary fears to now one of the worst performing tech stocks of the year. Meta and Netflix took huge losses in the beginning of the year, but have since had time to rebound. Ultimately, what you have to ask yourself as an investor for any stock is, are these real fears investors should be concerned about, or are these artificially inflated fears, right? The only difference that I see with Netflix and Meta versus Tesla is that Netflix and Meta were actually reporting very bad earnings, and it made sense for those stocks to fall. Netflix was losing hundreds of thousands of subscribers in the beginning of the year. Users in Russia were no longer able to access Netflix once the sanctions were placed. Obviously, that's going to have a weigh on demand. Meta took a huge hit as well. This has been going on for a while because of Apple's new privacy update. This took a huge hit on Facebook because they were no longer able to specifically target ads as well as they used to before this feature on iPhone. Tesla, on the other hand, seems to have been able to take on a lot of major headwinds this year, with Shanghai being shut down in the beginning of the year with COVID. Higher interest rates is obviously going to take a bigger hit on that buying power. Ultimately, when you look at a lot of headwinds Tesla has faced, it seems to have finished the year off great. So like I said, I'm filming this at 12:30 at night, so pre-market's not even open. I'm not sure what the market is going to be looking like today, the first day of 2023. In my personal opinion, it does seem like there could be a chance that Tesla rallies if investors seem like they sold off too aggressively. If they felt like this demand issue was a lot bigger than it was, because Tesla did miss the analyst consensus of 420,000. However, they still had a record-breaking quarter. Myself, I'm sort of a pessimist, so I'm expecting to see a drop in Tesla later today, but we'll see, who knows. So let me know what you guys think. There are a lot of headwinds that seem to be facing 2023 and on. Tesla seems to be the first one to have a go at it. All right, guys, thanks so much for watching, and I'll catch you guys next time. Thank you.